I'd like to introduce our first formal speaker who is here face-to-face, Dr. Kristin Alford. Kristin is a futurist. She's the founding director of Situ Foresight and the inaugural director of MOD. MOD is just up the road if you've never been there. It's awesome, you should go. MOD stands for the Museum of Discovery at the University of South Australia. Her background includes qualifications and experience in engineering, human resources, strategy, science communication, and futures thinking. She actively works across a range of sectors to help people create sustainable, prosperous, and equitable futures at the intersection of science, art, and innovation. Please welcome Kristin.
Welcome everyone, and thank you for having me. What a strong purpose to this morning already. I really like to thank both Robert Taylor and the recent speakers with the Roy Woodall Medal for bringing such clarity to why we do what we do. We all have that one thing that gives us purpose at work, that we love, that lets us know we are on the right track. For the last 15 years is that for me, I'm at my happiest and feel most fulfilled when I am helping people build capability for thinking about the future. So I do this in my freelance work, and I, as Alex said, I've been freelancing mostly with aged care and with SA Health, and I do it, as Alex said, with MOD, Museum of Discovery at UniSA, which is specifically designed to help 15 to 25-year-olds navigate their future. One of the principles about applying foresight is to sort of understand your own biases and perspectives first. So I want to be really upfront about the biases that I bring to thinking about the future and introduce myself a bit more fully. I grew up in an academic family. This photo reminds me of the time that my father, who was a pharmacy researcher, took me to the solar energy farms at the University of Queensland and talked about the coming energy revolution. That was probably in 1980. This photo of me is age 17 when I was doing vacation work at Mount Isa Mines. Unfortunately, that's the lead zinc concentrator. I did my second year working in the copper smelter, but I didn't think to take a camera to work in the early 1990s. But I think those two photos summarize my interest in how technology makes a difference to the world, and also, my interest in mining from a long time ago, but I think specifically how training and engineering taught me to think and taught me to solve problems. I moved on from mining, as Alex said, to work in a range of different disciplines, and including a master's in strategic foresight, and now I lead a place that does this. And this is a picture of the parachuting cats that are currently in MOD, telling a story about how to try and deal with malaria in Borneo in the 1950s. And it's a tale of unintended consequences. And so when Kathy this morning said, we should think about what may be, that's really the purpose of my talk for today. So another principle of futures thinking is to ask what future, why, for whom, and for when. And I really wanted to focus on the when aspect of this. So I still have lots of friends and colleagues in the mining industry, and I asked them, when you're thinking about the future, what are you thinking about? And the short answer I got was 10 years, which I will say is a lot longer than people who work in other industries where we're thinking about maybe a budget or a business plan of 3 years. So we're really thinking about a timeframe of 2032, and the minister said this morning by 2030 we'll have 100% renewables. So that's a really reasonable timeframe to be thinking about the changes that need to take place over the next decade. And we're probably also thinking back 10 years. What have we learned? How do we apply it? But we can think more broadly than that. So if we think about when Adelaide was settled in 1836, the way it was settled still has implications for the work we do today. And Robert talked about the stones that make Trinity Church, for instance. So copper was first discovered by Francis Dutton in Kapunda in 1842. Copper industry was very active in the state by the 1880s. So if we take that time frame, maybe we should be thinking about a future of 2020-02. So when we're thinking about the future, what does the next 200 years look like? Or, as Robert said, maybe we should be thinking more long-term. And in some of the conversations I've had with friends who are Ngukurr, they've talked about the stories that the Ngukurr have to describe where deposits are on country. And so the stories of mineral deposits, the stories of those things are incredibly old. So maybe we should be thinking 45,000 years into the future. Or maybe we are still trying to solve, 250 million year puzzles, which is when copper was first laid down in the deposits. So which time frame do we choose, and how do we be more accepting of some of these longer term time frames to inform our futures thinking? And Richard Slaughter, who's a Queensland futurist, has a rule of the 200-year present, which is to say any decision we make, we should be making standing in the middle of a 200-year present, where we can know our grandparents and we can imagine our grandchildren, because the decisions that we make from day to day are inherited and will be inherited. And so if we can have that kind of mind frame, we'll make better decisions for the future. And so I thought today we would work on thinking about 2200. That's not exactly easy. I mean, we've already heard about the immense social and technological change that's going to happen in the next 10 years. So how do we even imagine 2200? So one of the ways that we do this is by using archetype scenarios. And we did a project with the Academy of Sciences a few years ago now, looking at Australia in 2050, using a range of different stories to help us think about the future. So one of these stories was a story of growth. And so for a lot of us, that's the business as usual trajectory. Can we grow our profits? Can we grow GDP? We're growing population. What does that look like? The problem is that the growth model that we have was set up in a time where we weren't pushing against planetary boundaries. And so I think growth is difficult, because we're at a point in time, if we keep growing, we're going to affect the biosphere. And that's going to come back on us. We can't keep pushing indefinitely. That was clear from the limits to growth that was published in the 1960s, and a recent report by KPMG found we were pretty much tracking to some of the predictions around that. So Kate Rayworth, who is the instigator of a field called donut economics, asks us to think about how we operate in a space that doesn't impinge upon planetary boundaries, but also doesn't undershoot, and make sure that people have access to clean water and food and security and safety. So growth is problematic because we're hitting up against boundaries. The next option is catastrophe, and these pictures come from a session that we did at the South Australian Museum. This was the catastrophe session where we all got to eat a little biscuit made from mealworms and some green ant tea, because there was this idea that might be all that was available. I don't know how many of you are on TikTok. I'm getting blank stares. There's a joke on TikTok at the moment where God says to Angel, "Did you schedule all those disasters for the 2020s?" And the angel looks back at God and says, "What do you mean plural?" And if you look at the things that have happened in 2020, and you think about what's happening in the general media, COVID-19 pandemic, government instability in the US and certainly in Afghanistan, the violence that we're seeing unfold in Afghanistan, the climate effects like the bushfires in Greece and the bushfires in Canada, social violence with one woman being killed a week through domestic violence, explosions of addiction. The other TikTok thing that comes to mind is this realization that we'll start to slowly see the end of the world through a series of 1-minute videos until it's our camera taking the footage. So you could argue we are already in catastrophe. I like to be a little bit more optimistic and say that those are the signs that are shaking us out and saying we have to do work, we have to do life better. The next example of an archetype future is thinking about a restraint future. This is something that we're probably all dealing with day to day, eat less, use less, reduce our carbon footprint, be more energy efficient, spend less on stuff. But it feels constraining, and we have this human desire for novelty. So how do we do that? And the last future is this idea of transformation. So this is actually Rocky Road made with crickets. Again, I can't really recommend it, but if we're thinking about the future of food and we're thinking about how we might replace a large protein industry with something that's more sustainable, then crickets are excellent. So how might we build environmentally sustainable, socially equitable and economically prosperous futures with novelty and accomplishment and all the things that make our hearts sing is really the question for today. And how do we do that over the next 200 years? So the signals for future transformation that I see in my work with health, but also especially from the museum sector, there are 4 things. climate futures, thinking about the social contract, thinking about work futures, and thinking about decolonisation. So these are those weak signals of transformation. So first of all, let me go to climate. This is an image of a decommissioned oil rig. We currently have a project at MOD where we're asking the public if they think decommissioned oil rigs should be removed from the ocean or not. It's a project being run through Deakin University, and it's really tricky because you would think the answer is yes, and they're legally obliged to do so, but they become huge vectors for biodiversity. And so by pulling them out, we're actually doing harm. But I think this picture kind of sums up some of the tension we have around fossil fuel use. So, you know, the reliance on fossil fuels that we've had to date, and we can see these weak signals of change with mining companies divesting fossil fuels or scaling down, the loss of social license in some areas towards that sort of activity. Actively shifting transition to post-carbon economies through renewables. And the minister this morning spoke a lot about the requirement for copper and also rare earths in fueling that transition to renewables, and just the huge demand we'll need if we are to make that transition before the projected 2040, 2050 kind of limits. So there's the enabling aspect to that. There's also the use of renewables and this shift from mining companies using diesel or using fossil fuel energies towards building their own solar and wind farms. So the vision for green mining is a circular economy satisfied by reuse and recycling. But how do we do that in a way that doesn't make other things worse for the environment, that doesn't push up against biodiversity loss is a good question. And so again, donut economics asks us to think about regeneration. So how do we do regenerative economics? How do we make things build? How do we move towards a circular economy? And copper is already quite good for that when you look at the recycling of copper in the system. So how do we get better at that? The social contract. So recent lockdown protests have underscored the gaps between belief and reality, and science doesn't care if you don't believe in the virus, and it doesn't care if you don't believe in climate change. It happens anyway. But many have found that the path to online engagement is through fear, and it's through conspiracy, and by driving those types of misinformation, they get personal rewards. They can sell a product, they get political gain. And so at the moment we have this crisis of the fourth estate. And increasing mistrust of government and increasing mistrust of industry as well. The other aspect to social media means our filter bubbles get tighter and tighter and tighter. And the algorithms that we are improving all of the time seek to feed us even more of the same information of the things that we need. So we trust our ties, we become more tribal. The other problem with the media is that the business model is disconnected from the purpose. So the business model is rewarded through clicks for advertising, not through holding up a fourth estate. It's about being right, not doing right. For every trend in one direction, we see a trend in the opposite direction. So while this is happening in the mainstream media, we're also seeing a call for greater ethics and greater accountability. So an increasing focus on that, and also an increasing movement towards inclusion of people. And so one of the things that I've seen a lot recently is this trend towards thinking about social enterprise, and even thinking about social enterprise as the only model for doing business. So what might a distributive social enterprise for copper exploration or copper production look like? And the minister, again, underscored the importance of collaboration in the industry. Are there different structures that we could put in to think about how that works and how that benefits whole communities, how the economic benefits of the industry are truly shared? There's increasing concern about future generations. So we see things like the, not a new thing, but the establishment of the sovereign wealth funds in Norway, or the introduction of a Future Generations Act in Wales. If we had a Future Generations Act in South Australia that asked us to be accountable for 2020-02, what would we be doing now to make sure that 2020-02 was a place that we all wanted to live? Moving to work futures, this is an image again from a display we have at MOD at the moment, which is a demonstrator looking at Industry 4.0, so customised manufacturing, autonomous driving. It's a bit smaller model than most of the autonomous vehicles that you'll be working with, I realise. But again, we've heard about the promise and the reality of automation taking dangerous repetitive work for better safety. And the minister again talked about this in the Hillgrove Trail this morning. So how might we free up people from physical and dangerous work? And then what does more human work look like in this industry? Because in many other industries, the more human work is about caring work, it's about creative work. So what kind of work will you do if you are freeing people up from the dangerous, repetitive work? I think safety at work is also topical given the conversation I've just had around thinking about sexual violence. So certainly Australian of the Year Grace Tame has brought sexual abuse to the attention of the country. But the sexual harassment that we're seeing in federal parliament, it's sort of exploding over this year, I think is a very strong wake-up call to all of us when we're thinking about safety in the workplace. So again, if we're focused on doing the right thing, then that sort of safety should be prioritised. And I think this is especially important when we start to think about the application of artificial intelligence, because how we train those algorithms for AI and machine learning will influence what they do. And at the moment, a lot of that training is based on very biased data sets. So, one of the things that comes to mind when I'm thinking about this is a book by Carolyn Criado Perez, looking at invisible women, it's called, looking at design. And her point is that at no point were women crash test dummies used looking at safety. And so actually no woman has been proven to be safe in the driver's seat of a car because that testing just hasn't been done. So if we're thinking about a world in which we are training and making a whole lot of assumptions on very biased sets, then we're not ensuring safety at work for all. The other opportunities that comes up, I think, when we're then looking at autonomous driving with this specific example is how do we leapfrog some of these legacies so that we're not still building in errors of the past 200 years and we're starting to create new opportunities and new technologies through innovation. This is a picture of a recent fire ceremony on Kaurna lands in the parklands. And this is an example of some of the signals that we're seeing about trying to reconnect with country and thinking about how we better honour that Aboriginal spiritual connection with land. So we seek to be inclusive by providing opportunities for Aboriginal people in our businesses. I do that at MOD as well. But I have to say, on reflection, that's done within a framework of what is quite a Western structure of the workplace. And again, I'm reminded of a conversation with a friend who was doing some fire business on country and said, we've had to go through a whole lot of white fella protocols. It's about time that some people went through some black fella protocols as well, which got me to imagining what does that look like in a space of work? How might we reimagine work using both white fella and black fella protocols? How do we decolonize some of the systems that we use? And one of my favorite examples is thinking about music making. And one of my futurist colleagues pointed out that the software that is used for, a whole lot of music composition is based on Western music structures. So if you come from a domain outside that structure of music, the software doesn't work for you. So how do you create new technologies where those structures aren't inbuilt and they're much more flexible? I think also it's interesting, I'm also reminded of thinking about, recently I was an expert witness for the nuclear waste proposal. And one of the things that got me thinking around that was some work by Joanna Macy, who said if we're going to create a problem that's going to last for 500 years or 10,000 years, we need to make sure that we've got a way of warning people that there's a problem here. A sign saying nuclear waste dump here is probably not going to last 500 years, 10,000 years, but oral stories and oral traditions do. So how do we create these stories around the legacies that we might leave? And if we want to move from our 200-year future to our 45,000-year future, what are the new stories we might create about the way we use the land? How do we give thanks to the land? How do we restore the land? What are the new stories that emerge that explain what's happened for that very, very long-term future? So how do we create that transformation future? If those are all the signals that are happening, and I think the Minister's done a wonderful job this morning of also describing the technical innovation and the specifics for the copper industry, how do we use that as steps to create transformation? So the first thing, I gave you my very clear biases and perspectives at the front, but there'll be, as many perspectives as there are people in this room. If we're aiming for transformation and not just repeating the same things we've done again and again, then diversity and co-creation with people is essential, because that's where we'll find the new clues and the new ideas. Lengthen timeframes, so think beyond that 10-year timeframe. Think about a Future Generations Act for the next 200 years. Think about 45,000-year-old stories and how you might work with people to create those. Consider alternatives, so zoom in and out, shift your worldviews as you go around. And each of those weak signals, I've tried to present a couple of different aspects from different people. Explore the possibilities from weak signals. What are the others from inside and outside your industry that you're collecting? What makes you feel really excited? Or as I like to, especially for my 15 to 25-year-old audience, what makes you feel like you want to vomit because it's something you just wouldn't countenance? What gives you great joy? What makes you feel queasy? And that's where you should be following to see what possibilities arise. Imagine preferred futures. So I stated my preferred future up front. I want a transformative future that's sustainable, that's equitable, that's prosperous, that's imaginative. We all have different versions of that, but how do you work towards the preferred future that you want to see? And how do you keep that active purpose alive? And then finally, start now. So I think it's interesting to reflect on the fact that our COVID-19 response is actually in part because of the set of rules that were set in 1901 at Federation, and we're 120 years later. I think the other thing I'd mention here is I hear a lot of by 2025, by 2040, by 2050, but we actually need to make a start now. As I said at the start of the session, my purpose is about building future capability, but it's also about building rich lives that incorporate the many dimensions that we bring. I've talked a little bit about the stories that I think some of the things that Robert said this morning, but everything is culture. And the work we do here, the work that I do at MOD, the work that you do around the copper industry is embedded in culture, and it's embedded in thinking, I think, for the long term and for the sustainability of the planet. So I wish you well in trying to, I think if I wanted to leave you with anything, it would be start playing with those different time horizons and start thinking about those different drivers that might exist outside your industry. And I hope you're able to incorporate some of those ideas into the rest of today. Thank you very much.
There's your challenge for the rest of the day. She said, start now. Kristin's provided us a perspective not from a traditional resources background. She's challenged a lot of assumptions. She's asked a lot of questions. And I challenge you to reflect as you go through the rest of Copper to the World today on what she said. Start now. Start thinking, start innovating. And so now, it's my absolute pleasure to welcome our first international speaker today, Yi Zhu. Yi is in Hong Kong. Yi is a senior analyst of metals and mining in Bloomberg Intelligence. He has more than 15 years of experience in the metals and mining sector. Prior to joining Bloomberg Intelligence, Yi was a research analyst for Goldman Sachs and the Royal Bank of Scotland in Hong Kong. He also has a strong background in industry research and commodity trading, having worked for metal producers including Alcoa in the US and Shenhu Aluminium in Shanghai. And today Yi is speaking to us about a post-COVID copper market and the medium-term global outlook. Please welcome Yi.
Thanks, Alex, for the introduction. And it's my great pleasure to speak today and share with you my analysis and outlook for copper. I will share with you our views on is there a super cycle for metals? What are the impacts of carbon neutrality to the metal industry? And last but not least, we think Dr. Copper will lead among all the base metals. So, metal prices have jumped since April last year. The mismatch between supply and demand, a weak US dollar, are main reasons. So you may ask, is there a super cycle for metals now? To answer this question, let's look at the history first. On this chart, we showed LME copper price, both real and nominal. In the past 150 years, we believe there have been three major metal supercycle phases. The first arrived in the late 1800s to the early 1900s, driven by the US economy boom. And the second was driven by post-war construction from 1945 to 75 in Europe, and later by Japan's massive economic expansion. The final and most recent metal supercycle from the early 2000s to post-financial crisis was driven by China's massive urbanization and industrialization growth. And all three supercycle periods coincided with high and rising intensity of metals use, which we believe as the most useful indicator of a supercycle. In the past 2 decades, China's intensity of use surged to drive its annual demand across most metals to around 50% of the world's total, from only 15 to 20% in 2000. And as China's growth model shifts from investment center to consumption driven, the demand growth of metal will slow down and intensity of metals use will ultimately decline. So we do think there is a bullish market for all metals, but there may not be a supercycle equally for all the metals. Because, first, on the demand side, metals lack post-China supercycle drivers, and no other countries can take the torch from China yet. And two, on the supply side, supplying countries are ramping up supply after the disruption caused by the COVID. And third, we think the low to negative interest rate environment and expanding global money supply has been one of the key reasons driving up metal prices and will continue to support metal prices until the inflation reach an alarming level and prompt central banks to tighten. Then metal prices could cool. So then let's look at carbon neutral, which has been objective widely accepted and in turn provided a very strong incremental demand for certain metals. And carbon emission is also on the agenda of many exchanges, including exchanges in China. So the question is how this going green action will impact metals, or specifically on copper. We think this question can be answered from two sides. First, from the capital flow side, the accelerating momentum to decarbonize may see industrial metals take over from energy as the main sub-index, helping commodities as an asset class regain their inflation beating powers over the next decade. And among all the metals, we think Dr. Copper can get capital boost at oil's expense, as crude oil is vulnerable to EVs, because EVs proliferation and clean energy investment suggest road fuel demand may head for structural decline, while copper consumption could surge as battery power infrastructure develops. So capital could switch from oil-related assets to copper-related assets. The copper-oil ratio, which we show on this chart, has traded above the average resistance level before the pandemic, which implies investors' anticipation of a possible post-pandemic shift in both commodities price patterns. And two, from the supply-demand side, we think decarbonization will boost demand for most of the metals, especially copper and nickel, to the detriment of fossil fuels. Copper could be the metal most beneficiary to green demand and energy efficiency due to its supply growth concerns, rising green demand, and its macro exposure. And now the average lead time from first discovery to first metals has increased by an average of 4 years to nearly about 14 years now. And increasing social and environmental awareness means that mining companies need to engage community and governments very early in the project development. And copper miners' capex was still below previous peaks and won't recover significantly within the short term. So the greenfield mining projects won't be enough to boost the supply immediately. And as one of the nature's best conductor of electricity and heat, copper will benefit from the green segments of EV, renewable power generation, and from copper-intensive end markets such as distribution transformers, electric motors, and air conditioner. And we think green demand and energy efficiency may result in copper demand rising at a compound rate of about 3% a year versus about 2% long-term trend since 1950. So as metal prices are bullish and carbon neutral will boost green demand, we think among base metals, docked copper will continue to lead due to green demand and lagging supply growth. Because in recent years, major miners have focused more on shareholder returns rather than new capacity, which in the current market suggests some level of underinvestment. On the left-hand chart, you can see investment in new mines by the top 40 miners globally dropped to a record low in 2016 and hasn't recovered significantly. And on the right-hand chart, the capex trend is the same for the copper miners. Even though capex will pick up this year and going forward, greenfield projects may ease copper deficits in 2022 to 2025. And our analysis shows that increasing technical complexity and approval delays could lead to a dearth of shovel-ready projects in 2025 to 30. And we calculate that of the 12 trillion US dollar in global post-pandemic fiscal stimulus, about 800 billion will target low-carbon infrastructure and manufacturing. The green transition is a key theme driving infrastructure investment over the next decade. Rising demand for new power generation capacity, which may be wind and solar, along with EV, should spur more intensive consumption of copper. And we estimate that copper demand in clean energy technologies may double in 2030 versus 2020 levels. While this is significant and represent about 10% of world copper demand, or an incremental about 1% per annum, China's growth trajectory remains far more significant. So, to summarize my presentation, we don't think there is a super cycle for all metals yet, but the bull market for metals is well established. Global carbon emission and carbon neutralization will boost demand for copper. And copper is our top pick among metals due to the tight supply and booming green demand. And that's the end of my presentation. Thank you.
Thanks, Yi. We really valued that, and I really valued the streaming quality. I was a bit nervous about that. Our next speaker is calling in from New Zealand, Harrison Mitchell. Harrison is the founder and the Chief Executive for Business Strategy at RCS Global Group, an internationally recognised expert on responsible sourcing. He leads RCS's global advisory work in responsible sourcing for a range of industry associations and leading corporations, including ICT and the automotive sectors. He's also widely published and quoted in expert publications, including the Fin Times, Wall Street Journal, and BBC. And today he'll be speaking about a very topical topic, electric vehicles, the emerging electric vehicle sector, and its expectations for sustainable supply chains, including copper. Thank you.
Great, thanks very much, everyone. I'm sorry I can't be there in person. I escaped Europe a couple of months ago to go straight into lockdown myself, so apologies I couldn't come over and do this in person. I've been asked to talk to you today about the emerging EV sector and the expectations on sustainability in supply chains, including copper. Just give you a bit of a background, just very quickly, and the reason why I'm talking to you is we have been working for the last several years with most of the automotive companies that are moving towards promoting EV as a fundamental part of their business model. And in terms of the background to what's happening, especially out of Europe, the regulations and the requirements and the strategy of these car companies is moving to incorporate climate change and ESG performance as a fundamental part of how they do business. And that's just not something that they see as a nice to have. It's something that is now put into their strategies and increasingly into the law in Europe as well. So we work all up and down the supply chain, also with the automotives, as you can see here, but also with producers and in between. And so we have a deep understanding of that supply chain from a mine site all the way through to the OEM. From the point of view of the downstream companies and the pressures that they are coming under, you know, they are seeing copper as one of many many metals as part of their portfolio. So there was a key study done about 2018 that looked at a wide range of materials, as you can see here, including copper, and ranked them according to the consumption level as well as the ESG exposure risk. So you can see actually copper here is kind of a median in the middle, a performer, not too high, but not too low either. But that obviously means that from a point of view of looking at you know, which materials they're going to focus on the most of the automotive sector at the moment is focused on battery materials. But once there's a degree of oversight and control over these materials, which is something which is going to happen fairly soon, they will start to look further out to the other materials on this list. And this is something that's been very explicitly stated. So, for example, Volkswagen has a 15 material strategy. Other companies as well have strategies that include materials from 15 to 20 different raw materials. So it's something that's certainly coming, and further than their own strategies, it's something that's now moving into the regulations themselves. So these regulations that I've mentioned here, and there's a couple others on the next page, aren't in themselves quite specific to copper. We have the battery regulation that is forthcoming, that is obviously looking at battery materials. But there are a couple which are, not specific to raw materials, such as the human due diligence law and the German due diligence supply chain law, right? But hopefully you can see a couple of trends here that are useful. The flags should give you some indication of where this push is coming from. It's coming quite clearly from Europe. But fundamentally to this law, what it is doing is it's pushing requirements. These laws are pushing requirements onto those downstream users, the auto companies, to do something about their due diligence, to do something about how they source their raw materials, right? So the obligations are going to the downstream companies, and that in turn is obviously going to be pushed down the supply chain because that is what the regulations are requiring. And the trend themselves are in one direction. There's not really an instance that we've seen where a law becomes softer or a law becomes less rigorous. Not just from a regulatory view, but ESG performance is now becoming something which investors are taking very, very seriously and requiring these downstream companies, and indeed your own companies as well, as I'm sure you're aware. So what are those kind of expectations, to kind of state it very prosaically? So I think what we've seen in the last couple of years or few years is a move away from a very raw, shall we say, or uninformed standard environment to something that's looking towards more. Because we can't. What's happened is that a lot of those companies are now under those regulations and having to really require a set of standards that are based on rigorous regulation rather than something which they may have referenced themselves as a nice to have. So where we're going with this is that a credible standard has to be independently developed for a start. So we're seeing the emergence of very credible, independently developed standards. They need to have a credible assurance process, something that is third-party audited. And they need to facilitate disclosure transparency, which means that the previous ways of doing business where producers or perhaps the middle part of the supply chain didn't want to disclose the source of the material, that information is now going to become a normal part of doing business. So that kind of transparency and disclosure is going to be an important part of both the regulations and other standards that the companies adopt going forward. So those are the kind of three general features. On responsible production, we obviously have seen the LME, and I know you're going to be talking, there'll be a talk after this one about the copper mark, for example. But the LME requirements are obviously driving a lot of the adoption of the OECD due diligence guidance and ISO standards around working conditions and environmental performance or environmental impact. Then thereafter, you start to get to more comprehensive standards where you get, copper mark, for example, has 32 different criteria, which you'll hear from. And then further than that, you get to even more in-depth standards, which are both comprehensive in terms of scope, but very in-depth as well, right? So the trend, again, is moving from kind of very simple requirements at the beginning to far more in-depth requirements. And again, just to reference, some of those automotive companies that I've mentioned already have stated quite clearly that they have an expectation that their suppliers will source from, they will source only from producers who are, for example, IRMA certified by 2025. So there's already an expectation being placed in the market in certain materials by certain companies to push it towards a more comprehensive standard. And I think the other key trend, of course, is in circular economy, right? So, this is something which is, again, embedded into regulations. I have clients that are including the cost of carbon into their supplier contracts this year. And what that means is, of course, they're going to start using that cost of carbon as a way of measuring supply performance and pushing that efficiency down the supply chain as they try to obviously resolve those costs. So carbon footprint obviously has to include scope 3 emissions, right? That's something that's going to be very important. And obviously for this audience in Australia, that scope 3 emission, which includes things like transport, of course, is quite a crucial part of the understanding of your footprint. And then there are specific requirements, including certain rules and recycling targets that certainly the European companies are looking at. I have referenced here a few different standards that are kind of the starting points for companies in your position. I'm sure many of you are aware of those. But essentially, the fundamental reference standard for a lot of the emerging responsible production or sourcing standards is the OECD guidance. It's really designed to be a standard for downstream companies. So its suitability for producers is a little bit in debate. But nevertheless, it does form the basis of, for example, the LME responsible sourcing requirements and the joint due diligence standard, for example, that has from that. And then after there are other standards. I just wanted to, I'm not going to go into this particular slide in detail, but it's just to flag that there is quite a lot in depth in these kind of standards that needs to be produced. And our experience has been with companies is that they tend to underestimate the requirements taken to actually develop these procedures or management systems within their own company. So it's worth if you're starting to think about this now or needing to adopt standards for certain regulations, I would start sooner rather than later. For this audience, I think it's worth just pointing out the kind of practicalities of going down a particular pathway, like Copper Mark, for example. So, this is a comprehensive standard. We as RCS Global, we're also an auditing firm. We worked with Rio Tinto, Kennecott, to conduct the first Copper Mark audit last year. And, it's worth kind of understanding the process. I'm sure you've done these before, but, especially for a new process, it's something which takes quite a long time for the site itself. It took 4 days on site, of course, that, and included a kind of desk-based validation beforehand. But the pre-engagement and pre-assessment was more than 6 months, right? So again, just to emphasize on a very practical level, it's really worth ensuring that you are starting sooner rather than later to get to a very good an outcome within a timely fashion. And finally, I've been asked to see how the market is moving in terms of, and how it will impact on the copper sector in terms of this specific ESG and responsible production and sourcing point, right? So where I see it going at the moment is, obviously the regulators are going to increase pressure on those downstream companies. But I think it's worth pointing out that it's not just regulators that are, placing pressure on these companies. There is going to be a report later this year by Amnesty International, for example, is companies on in the battery supply chain and the EV supply chain on their performance and sustainability, right? And that's something which will likely create significant pressure on the industry to shore up their performance and their strategy towards ESG performance. And the requests from that kind of NGO, which can be very influential, do include asking these companies, these downstream companies, to have specific policies for their producers, for producing companies, right? On, for example, community engagement. So it's a shift away from specifically asking them to do something within their own space, within their own influence, either first tier, to something that is looking far more far-reaching down to the mine site. So that's something, a trend that's happening both at the regulatory level and at the NGO level. I think ESG has quite clearly moved from a nice-to-have to a must-have. And I think from our point of view, it's now being used as a way to, it's been incorporated into contracts, it's been incorporated into agreements between different parties. So it's definitely moved from something which perhaps was on the side to something which is now fully incorporated into the procurement strategies of the departments, and we can see that in our own work, where we've moved from, in the 14 years we've been working with the sustainability teams to now working with the procurement teams, right? And it's part now of the procurement strategies of these teams. I think there's a trend that I see as well, is that some of the producers have, need to play catch up. The best performing producers that we see have dedicated departments that are able to involve the company in a strategic fashion and bring the company forward to actually meet the requirements of the market, because this is a change that is happening, right? So, make no mistake, there is a big difference between what the expectations of yesterday were and the expectations of tomorrow are. So, the performers the good performers are going to have dedicated departments that are able to manage this workload, and then take that workload to a market advantage. I think the next trend that we see is obviously integration of technology to support transparency, right? So we see, we ourselves work on a project called Vine here, which links producers all the way up to OEMs and scores them based on ESG performance. But really, transparency is going to become the norm in the market because it's just too much risk and too much regulatory exposure for those downstream companies not to have full transparency in their supply chain. But finally, I think this opens up opportunity for producers who are looking to be strong ESG performers, and for example, reach out directly to those OEMs and have direct tie-ups with those companies. And it opens up different opportunities, I think, for both markets and relationships, business relationships. So I think it's a very interesting time, and encourage those of you that are interested in and have a strong ESG performance or want to be strong ESG performers to really consider that, as I think the and with that, I'll end my presentation. Thank you very much.
Thanks, Harrison. That was a great presentation. I think somewhere between a drive for copper, more opportunities, a higher price, mixed with Kristin's observations about challenging your timelines, starting now to think how you're going to get ahead of some of these curves that are coming at an accelerated rate, mixed with these expectations around ESG. While it might feel a little challenging, it's a really quite an amazing opportunity. And so to our final speaker in this morning's session, Georgina Hallett. Georgina is the Chief Sustainability Officer of the London Metal Exchange. You heard Harrison refer to that as LME. She plays a central role in all aspects of the London Metal Exchange's operations and is responsible for leading their sustainability and strategic initiatives. This includes delivering their industry-wide program in partnership with the OECD to ensure globally accepted standards for the sourcing of metals are embedded in the production of London Metal Exchange listed metals. She will provide us an overview of their role and the drive for greater transparency and the access to sustainable and responsibly produced copper. Georgina.
Good morning, everyone from London. I'm so sorry that I can't be with you in person. I'd love to be in Australia right now, but sadly we are still where we are. But delighted to be here virtually at least, and many thanks to the Copper to the World conference for making this possible. It's lovely to be with you all today in some form. So I've been asked to talk about the work that the LME has been doing in the sustainability space that incorporates for us both responsible sourcing and broader sustainability metrics on the ESG spectrum, and why we believe that this is important for the metals industry and copper in particular. So that is what I'm going to do. So obviously, this year has seen some recovery. We obviously had the record copper price earlier in May, for the 3-month LME price, which is fantastic and hopefully a sign that the industry is recovering. But obviously we also need to make sure that the industry remains fit for the future and that we are ready to meet new challenges as they arise. And for us at the LME, a huge amount of focus on that topic has been around the sustainability space. We started looking at this back in 2017 when we began to hear an increasing amount of noise around responsible sourcing in particular. So by that I mean mainly the human rights concerns, worse forms of child labour and so on, but also bribery and corruption. We were getting lobbied quite hard by consumers, as you might expect, but also various producers, and increasingly the risk and compliance department of our big member banks, that includes some of the US investment firms, who were not yet, but they were beginning to get concerned that at some point in the future, they were going to have to say to their traders that they couldn't trade copper and metal more broadly, that couldn't evidence that it had been sourced responsibly. And that obviously was a big concern for us at the LME, and we needed to make sure that the contracts met those requirements. So we thought long and hard about whether it was the exchange's role to take action, what we wanted to do, and ultimately we decided it was our role. And then the primary reasons for that are on this slide now. So we do think that we have an ethical responsibility to take actions in line with the LME's values, and we wanted to be working with the industry to make that happen. There is a commercial imperative, increasingly, as I said, our members and broad set of stakeholders were expecting infrastructure providers such as the LME to ensure that the products they offer meet globally accepted minimum standards. I think the other angle for the LME here is that we operate what is called a seller's market. So if you are buying copper through the LME, you don't choose the particular piece of copper that you receive. It's randomly allocated to you through our clearing process run by our clearinghouse, LME Clear. So the LME therefore has a responsibility to ensure that the brands it approves to settle those contracts, we call them LME listed brands or just brands, we had to make sure that the requirements we set for those brands meet the globally accepted standards for responsible sourcing and sustainable production more broadly. And that was very crucial for us maintaining our license to operate. And then finally, we wanted to provide leadership for the industry. You know, we're very conscious that this is a hugely complicated area. There aren't any easy solutions, but it was important to us that the solutions that we did come up with were appropriate for metals, that they recognise the idiosyncrasies of the metals industry and worked around them. So the rules had to be meaningful, obviously, but also feasible to achieve. So those ultimately were the reasons that we thought, yes, it is time for us to take action. It is the LME's role to do so, and then moved on to what our scope would be and what exactly we were trying to address. You know, ultimately, the driver here is that metals are absolutely essential for a sustainable future. I know I'd be preaching to the choir here, but the demand for metals, for clean technologies, for green technologies, the ones designed to help us meet the requirements of the Paris Agreement, are hugely intensive in terms of metals use. And therefore, it's a fantastic opportunity for the metals industry. But I think the risk that we were concerned about is that metals would undermine that value if we couldn't also evidence that they themselves were produced sustainably and responsibly. Copper is obviously no exception in terms of this fantastic outlook for demand. Copper is obviously absolutely essential to the EV industry. It operates very efficiently because it's a non-precious conductor of heat. It's absolutely crucial for many of the technologies, especially solar and wind energy. It's used in more than 8 clean energy storage solutions, and is obviously highly recyclable. Apologies. So clearly, there's a hugely fantastic narrative for copper here. Like I say, we just need to make sure that we can evidence it's also produced and sourced sustainably to ensure that that value isn't undermined. So that was the sort of the scope that the LME was looking at, and the narrative we saw developing, which is why we took action. So the first piece was the responsible sourcing one. Like I say, we started that back in 2017, and we announced the rules, the final rules set in 2019. So these rules are mandatory. They are a requirement for any brand listed for delivery on the exchange. And we have been working with those brands. We have about 500 of them. We have been working with them since the rules were announced in 2019 to make sure they understand them, to make sure that they're clear, to iron out any problems or things that we might have got wrong. And I have to say the progress has been fantastic. The copper brands are very aware of these rules. They have a very sophisticated understanding. And we feel very encouraged about the ability of those brands to meet the requirements when we start to see the reporting in next year in 2022. We've done various things to try and help with this implementation, various technical things. I think probably the primary concern has been the applicability of the OECD due diligence guidance, which is the basis for our rules. That was originally designed for tin, tantalum, tungsten, and gold. It does work for a broader set of base metals, but there are a couple of nuances for copper, for example, that we needed to iron out to make sure it was fully applicable. And the OECD and the LME are running a pilot scheme at the moment for the alignment assessment of brands, non-3TG brands. And I'm delighted to say that the copper mark, which I'm sure you're all very familiar with, is the sort of leading standard for the copper industry in terms of meeting a very broad spectrum of ESG requirements, but also the LME's responsible sourcing requirements. The copper mark has been the first external standard to go through that pilot process, and it's going very well. So I'm very delighted to report that. We've also published various guidance documents to try and help with areas of interpretation that perhaps didn't work quite as well for non-3TG metals. Those are all available on the LME's website. And then finally, some really lovely news. The LME board allocated $2 million from our enforcement proceeds. So that's money that from fines that have been levied on the market. And we have recently announced, I think last month, that we have allocated that money to 2 charities, the Impact Facility and PACT, with a particular focus of the work they're doing in responsible sourcing communities, so communities that are affected by these responsible sourcing issues. And we look forward to working with those 2 charities going forward as that work gets implemented. So that that was the responsible sourcing piece, and like I say, back in 2017, that was the clear focus of the market. But as I think I'm sure many of you have experienced as well, since then, the debate around sustainability, the conversation has just grown exponentially, and we now hear noise and concern and conversation around a much broader range of issues. Probably the biggest focus at the moment, as from what we've heard, is the emissions piece. So in 2020, we launched, 2020, we launched our sustainability strategy. So the core difference here is that while the responsible sourcing rules are mandatory for the LME listed brands, the sustainability strategy is a much, it's a voluntary piece of work, and a much broader set of tools. So on this slide here, you've got on the left-hand side in the dark green, all of the things that are available already on the LME under the three main categories for us, which are electric vehicles, circular economy, and sustainable production. As you can see, we already offer a number of things that help on those three target areas, including, of course, the LME copper contract, which is essential for the electric vehicles industry. And on the right-hand side is the work that we're doing now to try and help support the metals industry as we transition into a more sustainable world. So we have new contracts. Our lithium contract launched last month, which is great news. It's been a long time working with the industry to make sure that meets the industry's requirements. We have new scrap contracts, including an aluminium scrap contract. The responsible sourcing rules, obviously, I have spoken about already. We also have 2 ISO requirements in there as well. And then finally, the last 2, LME Passport and the spot trading platform. So these were driven by what we heard was an increasing demand for transparency in this industry. So a lot of our producers already produce fantastic sustainability reports or CSR reports each year, very detailed, long documents with incredible amounts of information. The issue with those is if you are trying to find out something that you're then faced with reading a huge document in order to get the pertinent piece of information for you. So the Passport platform is designed to provide a centralized data repository for the sustainability information. We have defined a taxonomy for it, which is here, which covers broad ESG topics, and obviously a multidimensional one for things like the copper mark, which cover a spectrum across the ESG world. And the point of this will be that you'd be able to go onto that, be freely available. You could have a look at data and compare across companies if that's what you're interested in. And it's just designed to help the industry, I think, just be really proud and open about the fantastic work that it's already doing in the sustainability area. And obviously we can add new categories to this as they become available. So if you have ideas or there's something you'd really like to see up there, please do get in touch with us because we'd love to hear from you. That's the transparency piece. The second part of this is about access. That's the spot trading platform. So we think that transparent information becomes even more powerful if you can then make trading decisions on the back of it. So we would like that passport information to feed through to a spot trading platform where people can trade bilaterally with each other. LME Passport goes live at the end of this month, 31st of August, and the spot trading platform will come sometime after that. So we will keep you posted on progress there. We're really excited about these initiatives. We think they will offer the market a new set of tools and valuable platforms which will help progress this agenda. This is a taxonomy as discussed. And then finally, I just wanted to take a brief moment to talk about the 3 principles that underpin this broader sustainability strategy, because they're very important for us in terms of recognising what we think the market is asking us to do. So like I said, the broader sustainability strategy is a voluntary piece of work. All of the things outlined on that table a couple of slides ago are available for people to use, but not mandatory. And that was very important. We wanted to support this voluntary disclosure of data and make sure it was something that people were actively trying to do for themselves. We wanted to maintain a broad scope, so we were very conscious that what the LME might define as sustainability doesn't necessarily match what other people would define as sustainability, and it was important to us to recognise that rather than impose something very defined on the market. So like I say, on that taxonomy wheel, if there are new categories of information that the market would like to see, we would love to hear from you on that. And then finally, providing the necessary tools for change. You know, we spent a lot of time with responsible sourcing working out exactly what we were trying to do and how to do that. And that was especially important because it was mandatory, like I say. we are conscious that there is always more than one way to achieve a certain end, and we wanted to provide as many ways as possible, as many tools, platforms, contracts, and so on, so that the market could choose the route that worked for it rather than having that imposed by the LME. So that is why we've taken this broad brush approach, providing a number of different options for people. And we hope that within that, people will find some options that are appealing to them and that work for their business models. So that is the whistle-stop tour of LME sustainability. I'm going to see if I can close my screen share now. Always a bit of a gamble. So with that, I just wanted to say many thanks again to the Copper to the World conference for the invitation to be here today. Very much hoping to be there in person next year. And if anyone would like to talk to the LME further about sustainability or any other topics, please do get in touch. We'd love to hear from you. And we are very enthusiastic about working with the copper industry moving forward to make sure that we're addressing the challenges of sustainability together. Thank you so much, and I hope you have a fantastic rest of conference. Bye-bye.
Hello. This brings this morning's session to a close. If you didn't have a perspective on where the global copper future was before you got here, I'm reasonably sure you're now walking away with a pretty up-to-date perspective on not just demand, but the trends in how we source it, how we get it out of the ground, and indeed, as you can see from LME, how it may or may not be sold in the future. We are at morning tea time, and we are a little bit over, as any good conference is. The next session will start at 11:10. Your host will be Rowan Cobcroft, the Director of the Geological Survey of South Australia. We have our exhibitors. It's an opportunity for networking. Feel free to bring food and drink back to the table, given the awkwardness of juggling with the COVID restrictions. Take advantage of the networking till 11:10, and you can bring a drink and you can bring your food back in for session 2. So thank you very much. Thank you very much to our presenters, to Kristin, to John, to Kathy, and have a great morning tea.